Well, welcome back, everyone. It is the day before we hear from Powell officially tomorrow from the second day at their Jackson Hole Symposium. Let's get right into how markets are behaving. What you're looking at are three charts that are daily candlestick charts, so each bar represents a day. You've got the S&P E-mini futures on the very left, the NASDAQ, and then the Russell. Now, the interplay between these three markets has been very useful, as you've heard from Rob at the end of last week or Sunday video, and it's helped throughout the week. Now, where we want to take today is a good understanding of where we are in the sequence of Champion Trend Pack signals on all three of the indices. So when you take a look, or futures contracts, when you look at the S&P E-minis, we got into stage one last Friday and stage two, Champion Trend, Champion Cross, and Wealth Signal. We then saw breakout forecasters present effectively 3 days in a row up until today. Now today, we've got a red bar, something that you may have heard me talk about as likely there's some exhaustion under the hood, where we can pull back but expect a bounce. So the pullback to the first or second breakout forecaster, which is not fully complete as of yet, would very likely resolve to a bounce, okay? And what we are dealing with right now into the end of the day as we're ticking down, still got another 10, 12 minutes left before the markets close for cash hours. Futures keep ticking away after that, though. What we know is that coming down to this area is very likely going to resolve in a bounce. So this is a profit-taking pullback that has not yet turned into, broken channel and down we go, like we had before Japanic Monday. For the NASDAQ, it's similar. The NASDAQ is, of course, a little closer to its channel and, of course, the last breakout forecaster, which was really only yesterday. So we know that the leading market with the heavyweight plays in it is already telling us an expectation to pull back down is in play. Furthermore, the canary in a coal mine, or the foreshadowing index, the Russell, has already come down into its channel. So the idea here would be, ahead of Powell, a pullback to refuel and have Powell come in and give us a statement that is, well, neutral to, let's just say, somewhat incrementally bullish vis-a-vis what he has already said, or incrementally dovish would be another way to put it. Now, that would not be off base. At the end of the day, if the mainstream media headlines out there are talking about fear of the economy slowing down, and which is juxtaposed to the strong retail sales data, which may be a bit of a condition where you're not really seeing a clear picture. Well, let me paint the clear picture for you. The data continues to be revised down month after month on the retail sales. The job market is certainly seemingly tapering off in its growth, and hourly wages. We are certainly seeing most families have a issue with the higher prices of the things we need. And the things we want are very difficult to get at this time because credit is tighter. So at the end of the day, when you're looking for data like we got today, the PMI services data, the market PMI, it came out a little stronger. But the market didn't give you what you'd want to really see, a robust presentation where everything is happy. And no, the market's expecting some easing. And the market's expecting easing sooner than later. So what you're seeing today is the ask for that. And a pullback to the channel, pullback into the channel on the Russell, pullback down towards the channel, or the last couple of breakout forecasters, can present a springboard. Is it likely that we pull back? Well, we're already on our way, and the only way that I'm going to be able to aid and abet in that insight is go down a time frame to a chart that looks out 3 to 5 days. Typically, 3 days would be the way that I would see it in this type of a market. On a 4-hour chart, we've already come down. We're already in a spot where we have lost the champion cross buy signal. It's already there for the NASDAQ, and the NASDAQ's almost below the 4-hour channel. We're no longer in a champion trend buy zone on either of the two. Interestingly enough, the Russell is still holding against its 4-hour channel, but it too has lost the champion cross buy signal. So as you look at the interplay between the 4-hour chart on the Russell and the daily chart, you get a fairly good sense that we're going sideways, consolidating. Okay, and the Russell as a foreshadowing index could tell you, hey, we're probably going to see a little bit of a lower low here, but the idea would be, similar for the NASDAQ and the Russell, it would be a dip and bounce. So we still have a little bit lower to go would be the idea from the daily chart. Come down to that breakout forecaster, around 19,450-ish would be the area, to about 19,350, to be quite frank, is the risk range down, but then a bounce would be expected. If we take a look at the S&P E-minis, a move down towards roughly 5,550 would not be off base still, but again, the idea would be a bounce up off that area as more likely. We are waiting with bated breath to hear from Powell from Jackson Hole tomorrow. 10 a.m. Eastern time will be the moment of the speech, and lots of activity is likely in the market tomorrow. Activity where folks are on either side. Wider ranges, a little bit more volatility would be expected, but then after the event, the resolution, even if it's a move down, we would expect that volatility to start tapering off. More likely than not, a move down ahead of the event continues. A bounce up from the event is likely from my perspective. The question remains, is it likely going to stay up in the air against the all-time highs? My expectation is we come back up and challenge them. However, Powell has to generate enough interest in his stimulus. His plans are going to provide that support to the consumer, to the citizenry out there. And that's going to be a hard thing to do. So he's got to walk a very tight line, and we are waiting for that financial theater with bated breath. Looking forward to updating you further on this as we move into the end of the week. I hope that this video has given you some perspective in terms of where the risk range down is, and of course, the opinion I provided on a potential bounce off those technical springboards. Have a great rest of your day. Thank you for watching, and we'll see you on the next video. Bye for now.